Tomorrow, Federal Reserve Chair Jerome Powell will address the annual Global Central Banking Conference in Jackson Hole. With the approach of the event, there are more and more rumors about a revision of the regulator's stance on monetary policy tightening. In other words, the magnitude of the key interest rate hike is likely to become smaller. The fact is that some representatives of the US regulator have expressed concerns about an excessive experienced dollar. That's why most traders consider such comments to be a hint about a possible switch to a more dovish stance. In addition, major currencies are already gaining in value, though at a slower pace. The euro has finally approached the parity level, and this trend is likely to remain in force until Jerome Powell's speech. The future situation will fully depend on the announcement he will make. All other factors are of minor importance at the moment. Notably, the immediate fundamental picture in Europe is not favoring the euro. The EU is falling deeper into the energy crisis caused by the ongoing rise in the gas prices. Meanwhile, Germany's business activity showed the most considerable decline since June 2002. At the same time, in France, business activity also began falling. On the trading chart, we see that the euro-dollar pair has been hovering within the range of 0.99 and 1.00 for 2 days already, showing mixed activity. Bearish sentiment is still present in the market. Under the current conditions, a jump of 100 pips is just a short-lived phenomenon. Once the price breaks control levels, it may show an outgoing impulse. The upward scenario is likely to be presented in the form of a short-term correctional movement. However, it will become possible only if the price consolidates above 1.0050 on the 4-hour chart. If the pair settles below 0.9900 at least on the 4-hour chart, it's likely to resume losing value, and in this case, traders will receive a signal about the trend prolongation. At the same time, the pound-dollar pair rebounded from the support level of 1.1750 for the second time during the week. As a result, the pair started hovering within the 130 pip range. A slowdown near the bottom of the downtrend pointed to the overheating of short positions. The pairs trading within the existing range may result in new price impulses. If the price settles below 1.1750 on the 4-hour chart, sellers will have a chance to push the pair lower. If it consolidates above 1.1880, the upward correctional may continue. How will going to be in the short term on financial markets, we will definitely tell you in our next news releases. Don't miss them and stay up to date with us. See you soon!